Hello traders, hello everyone, my name is Gregor and welcome to our new analysis surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by EURGBP. I will look at the SP500 futures, Euro Pound, 10-year US notes, dollar Mexican peso, and even Euro Yen. Now, firstly, let's take a look on the S&P 500. So the last time when we spoke and covered the S&P 500, well, we said that the important level that should hold for bulls to stay in play should be 39.50. So we were neutral back then. We said that we need a bounce while the market was trading above that level. We need a bounce to 4,200 to make sure that we are headed back to the uptrend. Or if we see an overlap with 39.50, then we will have to turn bearish. And we can see that this overlap has happened now. We came quite deeply to the downside, now approaching this trendline support. So there can be some price stabilization, but overall, the most important for me is that the recovery was made by three waves. So it looks like that sentiment is still bearish here. Powell is very hawkish. And actually they know that with higher interest rates, they will obviously do some damage to the US economy, and this is unfortunately have to take place to bring the inflation down. So it looks like that there is a lot of pessimism right now going on, and I would not be actually surprised to see market retesting these June lows maybe at some point. However, for now, before market may see more weakness, just be aware of this trendline support. To be a little bit more precise here, it comes in around 38.80, around there. So watch out for potential rally. I think that rallies in three waves could actually be opportunities on the short side, either into a very big wave 3 or maybe even wave C of C. So to give you the full perspective on a higher degree time frame charts as well, well, this is now my primary wave count, looking for push down into wave C. At the same time, watch out this fear index. We covered this one a few times in the past updates. There is a plenty of room to the move to the upper side of this range. Okay, so obviously there will be much better buying opportunities when you see pessimism at extreme levels, and for now that's clearly not the case yet. Volatility is not that huge just yet, but it could easily unfold into this direction if we see this broken trend line. Now, another wave count and interpretation that we should keep an eye on is also a potential triangle, but even this one will suggest more weakness into this wave C after a rally. Okay, so no matter how I look at the market at this stage, I think that there can be more weakness coming after any short-term bounce. Okay, so generally speaking, I think that the stock market is in a very big consolidation phase, which unfortunately is not over yet. Firstly, we thought we gave it a chance when the market recovered here, but I said that we still need the 5 waves up from the lows, from new swing low, to make sure that we are headed back into the bull run. But unfortunately, that's not the case. Now, let's take a look also on the 10-year US notes. Now, when stocks are in downtrend, obviously the US dollar is doing well, and this also has to do a lot with US yields. And if you look at the notes first, you can clearly see an ABC recovery. We stopped at the former wave 4 resistance. We are breaking the trend line, the swing support. So it looks like the bears are here and could be fifth wave in place. So I think that this cycle will not change until we see a new low. So when the new lows will be seen and highs on yields, I think that that's when US dollar could be approaching potential top. Looking at the yields here, obviously the opposite, the same picture. You can see correlation with the US dollar. Fifth wave is missing, so there is a plenty of room for further upside on the US dollar, and even commodity currencies could suffer a lot more in the upcoming weeks if stocks are really back in downtrend. Now, regarding the commodities, however, Mexican peso here will probably be one of the first on the list when we will maybe potentially move into some kind of a risk-on environment or just temporary stabilization. Then watch out for dollar Mexican peso. I mean, imagine where the US dollar index currently is trading and look where the dollar Mexican peso is. Still holding quite well here around these lows. So I think that this is a consolidation, and when US dollar index will and overall dollar will come into the very strong resistance and turn around, I think that this one will have no issues breaking some very strong support. So I still think that at some point, maybe later this year, maybe 2023, we could see a drop towards February 2020 pandemic lows. Okay, there was a massive move coming out of that level, so I think that we could be retesting it since the market reversed already more than 78.6% of the previous run. So I think that there is very strong bearish moves yet to come. Now let's take a look also on the euro pound. Now last time we talked about the euro pound as well. I said that we are at the multi-year swing supports here. The most important is that market made a reversal from that level. So it's not just blindly following the support, it's the price action that also confirmed that this market, this support matters. So what I'm looking based on cyclical analysis also, even if we'll stay in a multi-year range, well, I would not be surprised to see step by step moving towards the upper side higher range. Okay, so I think that euro could be in much better positions compared to pound. Looking at this daily chart once again, broken trend line here, channel, I mean, with the leading diagonal pullback, and now you are headed back to the highs. So watch out for a break above this June highs. I think that this could happen very easily because this 5-wave rise that I'm tracking away from August levels is still incomplete. So watch out and be aware of more upside. Now here's also the intraday outlook. There is a potentially a resistance because you are now moving into 161.8% extensions of wave 1 measured from wave 2, so that's a typical wave 3 target. So market could slow down. You have non-farm payrolls to report tomorrow. Maybe some price stabilization could occur even if we see maybe bad data, because you know that this could mean that maybe Fed, after all, Powell should not be that aggressively hawkish, but he said that he is aware of this potential some jobs that will be lost. So maybe even a miss tomorrow will not be such a big issue for their outlook. So generally speaking, euro pound at potential resistance, but there's still an uptrend. Just be aware of pullback, next fourth wave that could be opportunity on the long side. The invalidation levels would obviously be here at 85.10. But I would, if that was a flat for a wave 2, I think that much more important is at 84.90. So as long as we are above that level, I think that euro pound is in impulsive uptrend. Okay, now finally let's take a look on the euro yen. So euro yen, big picture, will not cover this, it doesn't really matter at this stage. What is important is you have an uptrend, you have higher highs, you have higher swing lows, so clearly it's much easier to follow an uptrend. Looking here at the daily chart, very nice free wave setback. We have seen a spike to the previous swing lows. Also the previous highs here were rejected, so I think that bulls are back in play. Also you have this broken trend line resistance, so watch out for more gains here as the price action will unfold towards 142.34. I think that this could be a next upward objective. Of course, just be aware of some pullbacks, and I will not change my outlook as long as we are trading above, let's say, 136 or so. Okay, traders, thank you very much for your attention. Hope that you enjoyed this video and talk to you soon. Bye.